Hi there, it's Bill with smarttrades.com, and today is Monday, January 16th. It's around 3:15 p.m. Pacific time, and I'm going to start right off with the S&P. But first, if you would like more frequent updates, please visit smarttrades.com. I do updates on a daily basis, both via email and Twitter, and again, that's smarttrades.com. Here's the S&P. This is actually my report from November 28th. And as you can see, we were calling for a low there and a rally up to 1300. At least this is one of the scenarios I was looking at the time. If you'll look back at other folks at that time, most people were calling this a variation of a 1-2-1-2 to the downside, and we're looking for an acceleration down. Lately, you'll find people are kind of coming around towards my way of thinking. At any rate, here's another update. This one was actually from the last report on December 21st, before Christmas. And again, we had had the rally starting to unfold pretty much as expected. Obviously, this is just a rough take here. It's not intended to show you every little wiggle. It's just to show you the basic target. And on the December 21st report, I had mentioned the 1300, 1310 area as an ideal target for the rally. Well, here's where we are now. And as you can see, we're approaching that area indeed around the 1300 area. Haven't quite gotten there yet. I think there's a pretty good chance we will at least test 1300. We may yet get to 1310. I do believe that it's in the context of a market that's probably topping. I do have some concerns with that. One of which is that everybody and their brother is out there calling for the same thing again. And rarely, when everybody is on the same page, do things work out the way that everybody expects them to work out. And as you all know, and you can see, I've been calling for this 1300, 1310 area for some time. But again, right now I've got a lot of company. I don't like it when everybody agrees with me. I think that that's cause for some concern here. At any rate, here's the this is actually a report and an update that I did before the weekend, calling for one more rally at least up to the 1300 area. This chart is not corrected in respect to time. Here's the update from today. If we get through 1325 on the S&P cash, this diagonal triangle type pattern will be null and void, because 3 will then be the shortest wave in this 5-wave sequence. And again, I want to emphasize these projection lines are just to give you a rough idea of price. As you can see, these both waves 1 and 3 took several days to unfold. More than likely, wave 5 would take a few days as well. It's going to probably be shorter than 1 and 3, but nonetheless, it should be symmetrical in respect to time. And again, that means several days. 1325 kills the pattern. Here's the NASDAQ. Interesting, somewhat different pattern, but also some similarities too. More of a classic 5-wave structure. One of the good Elliott wave trick is to look for the center point of the third wave. That usually is about 50% of the move. Using that, A equals C, 62% of wave 1, so on and so forth. We've got a nice little target for the NASDAQ in that 2400, 2410 area. It's certainly possible we'll go higher. Again, the one thing that concerns me in terms of this rally is, A, we're getting into these targets that I've mentioned, but also the breadth ratios are keeling over. You can see we've got lower peaks on almost each and every rally, and that's a sign of a market that's running out of gas. Here's a longer term chart on the NASDAQ. I do think that this rally up best counts as a B. The NASDAQ has a pretty good chance actually of making a new high above the 2011 high. So we'll watch that as it unfolds. But again, here's that target area, and I favor that we indeed are in a B wave, and we've got a C wave down, which will pretty much knock the bears out, suck all the shorts in, and we'll see how it unfolds. Maybe I'm wrong. Maybe it's going to be a much bigger decline than that, but that's where I stand so far. Here's the futures up until a few hours ago, actually through this morning. The NASDAQ futures have been rallying since they're open on Sunday. Um, this again is a review chart. This is the euro, and I believe this is from the December 21st report, and at that time I had noted that we had an ABC rally up and that I favored lower prices. Well, obviously we have gone down from there. This is my more recent chart showing a short-term pattern. We've got a very nice ABC up, 5-wave subdivision within C, and a possible 5 down now. Here's a slightly longer term chart. And again, there's that 5-wave structure out of a possible triangle. And here's the weekly euro. And indeed, you can see a possible ABC. It's kind of an ugly pattern, but we've got a cluster of targets around the 125, 126 area for the euro that should provide support, as well as parallel and different scale trend lines. Again, 125 to 126, we're getting close to that now, and perhaps we've already bottomed in the euro. If we drop below about 125 or so, it's going to negate this count in that we're going to have wave 5 is going to be longer than wave 3, and that's a no-no. This isn't the prettiest 5-wave structure down. I do have my doubts about it. This triangle is not a particularly good triangle in wave 4. However, if you do count it as such, you can see that 5-wave structure again down to the recent lows, and perhaps we're going to get a bounce. We'll see. So far the bounce has been very muted, so I do have some questions and concerns about the euro. On that note too, I think that the euro is if it does bounce from here, I have to wonder if it's not going to propel stocks through that 1310 target. But we'll take that one step at a time. I have a feeling that the euro and stocks may be decoupling to some extent, and also obviously at this point the euro hasn't rallied, so we're not sure that it will. Longtime subscribers may remember my count on the dollar here. Big ABC down. I think that we're in a contracting multi-year contracting triangle now. I think that's in the process of unfolding. I've actually noticed this count popping up on the web various places too. I posted this count I think almost a year ago, perhaps even before then. To be honest, I don't even have the exact dates of my original post. But again, in this context, basically we're going to see sideways to higher prices over the next year for the dollar, and then perhaps a D&E of the triangle. Short-term, just the mirror image of the euro, pretty much a different short-term count, but nonetheless you have a possible ABC, and we're getting into an area where you had swing highs, and it's also a 62% retracement on the weekly chart from the 2010 high in the dollar. Shorter term, again, we have a different pattern than the euro, but a possible terminal pattern nonetheless, and we're nearing that A equals C target area. Excuse me. Also, volume is not confirming the move most recently. You may remember, again, this is a review chart. Back on December 21st, I posted this chart of gold calling for a low ideally around 1540. And indeed, we did dip a little bit below 1540, but we did bounce from that general vicinity. And obviously, we held there. That this line indeed is 1541.53, and my approximate target for gold. I'm a little bit concerned now with the rally in gold. It doesn't have a clear impulsive structure. It's possibly an ABC, and it has broken its trend line. So we'll have to see how that unfolds. If we get a corrective decline, it would add some confidence to the idea that this is a bottom. Nonetheless, we did get a nice bounce from the 1540 area approximately. Here's the daily chart updated through today's prices. And silver, same thing. We had a nice little bottom down there off a 5-wave structure to the downside. But again, a little bit of a concern here in that we've broken this trend line, and we don't have a clearly impulsive pattern to this point. You actually can count this as an ABC up, and you can see that the market's struggling at previous 4th wave resistance, classic Elliott wave scenario. Crude oil. We've been calling for sideways movement in crude for some time. And indeed, 100 seems to be the oscillation point at which crude is swinging around. And once again, indeed, there's a critical, if it doesn't get through 100, I think that crude is probably going to see a bit of downside. That's a crucial area. If we can get through 100 and through these swing lows here, we may yet go back up and test 103, 104, 105. But again, I think crude is really more in the longer term into a sideways type of pattern here. Bonds, very much sideways, contracting type pattern. The 10-year notes have actually have more of an upward bias, but nonetheless, the bonds, both the 30 and the 10-year, are net sideways really now for 4 or 5 months. JP Morgan, in my newsletter, I had called for an A equals C possible peak here, an ABC up. You can see a pretty nice 5-wave structure within C. 1, 2, 1, 2, 3, 4, 5, 3, 4, 5. Again, 1, 2, 3, 4, 5 of C. We've broken down from there, gap down, little island reversal, in fact. And if we can't get back through 36.50, 37 in JP Morgan, that leaves the possibility this is a corrective rally and trouble ahead for the banks and JP Morgan in particular. Again, a review from the 12/21 report. I had called for this as a possible short-term low, even though I had concerns about Bank of America. Nice little doji patterns marking all the swings here, and this one in particular very nice in that it had a nice impulsive possible structure to the downside and a terminal pattern right at support and a nice dragonfly doji, as they call them. And that turned out to be a nice little low. There's that low from that last report. And I think that Bank of America best counts as still being in a third wave, or just finishing a third wave, I should say, and needing yet another rally. Although obviously it has broken rather sharply off its highs, and if it doesn't, if it fails to get back above 7, I would be concerned that this is a short-term top for Bank of America. And the banks obviously are very important in terms of the leadership for the broader market and the S&P in particular. Apple, to me, it looks like a bull flag. I think we're going to go up one more time. Google, Google is interesting here. Basically stuck between about 615 and 670. We had a nice breakout of this multi-year consolidation triangle. Very important that it hold that breakout and keep going. Otherwise, you basically will have a corrective style pattern with a possibility of a C wave coming all the way back to about 400. That said, so far it is holding. So we shall see. I would be concerned if we get like a corrective pattern that fails below 670. That would be trouble for Google. And here is Lockheed Martin. I had suggested this to my subscribers some time ago as a dividend play. We've got almost a 5% yield in Lockheed Martin. It's hard to get 5% these days in anything. Very defensive stock, as it were, and in a pretty solid multi-month uptrend channel, corrective as it may be. It still looks like it's got higher prices to come, so you have a chance. I had recommended this, I think, down in the 76, 77 area. And basically you have the chance here for appreciation up to the top of the range, perhaps 85 or higher. So a 10%, 15% move perhaps in price, as well as the high 4% yield off the dividends. Anyway, that's about it for now. Hopefully you had a nice, long, relaxing weekend all. And again, if you'd like more timely details and more frequent reports, please visit smarttrades.com and sign up for my newsletter. Short of that, please hit the like button and subscribe, if you will, here at the T1 Systems channel. And thank you very much for watching. Have a great week. Thank you. Bye-bye.